All right. Good morning, everybody. Hope we're coming through okay. Let me get my focus here. There we go. We're just going to give this a second to catch up here. We're in the public room and the premium room this morning, Andrew and I. Let's make sure this is still
Hey
coming through.
guys.
There we are. Yeah, we're showing up
Good.
there. If you can hear us okay, give me a little thumbs up, thumbs down, whatever you like. Andrew, your setup still looks just smashingly good.
Well,
I like
it's
that.
in for a bit of a change this weekend, actually.
Mm.
I'm just moving it all around because it gives me more space, and I've got another machine coming in. Because what I tend to do on, are we live now, aren't we? Sorry.
Yeah, we're live.
But I tend to be streaming permanently now in the premium, and I can't really do it on these screens because then it stops me doing what I want to do. So I'm going to change everything around on the weekend to the new setup next week.
Very nice, very nice. You have to let me know about that. Sounds like everybody can hear us okay, so that's good. That's good. So we're doing a little stream this morning. We picked a topic. Nick and Will and those guys helped us pick out a little topic for you. Just thought we'd start talking about leverage a little bit here this morning. But most of the talk, I think, is going to be question and answers, talking about the markets, talking about trading strategies, psychology, that kind of thing. So we're going to be definitely looking to be more interactive today with everybody. But we just want to say a quick hello and do a little chat about leverage. So what do you have to say, Andrew? I want to give a little disclaimer. Both Andrew and I are under the weather right now. Those in the premium room know. I mean, I think, Andrew, you had just a few hours ago had a fever and sweating, and I only slept 2 hours last night. And we both got the same thing, and Nick said we must
6,000 miles apart.
We must have gave each other the same thing over the web. So
must be a computer virus.
Yeah, that's funny. That's funny.
Yeah, I was in. I had to abort this morning on my stream this morning in the premium room because I was just coughing and spluttering all over the place. So let me start off by apologising to you all for abusing your eardrums. You can always turn me down if I start coughing, or maybe I should turn off on mute and all that. But we're okay now. I think I've hit it. I think, Jason, I might have hit a Fibonacci level in my fever, so I look as though I'm retracing back now.
That's good. That's good. Get a better entry. That's funny. Yeah. So I mean, what we want to talk about just a little bit is leverage and the dangers of it, and we usually try to have a little bit of a planned out thing, but we were talking yesterday and we thought, you know what? I think if we just sort of ad hoc it, I think we might be in better shape. So there's so many stories I can tell you about leverage and the pros and the cons. Most of you who've been trading for a while already know about leverage and how good it can be and how bad it can be. And on the little baby pips education, they show the Grim Reaper with the big sickle. It's the death of all traders, right? And it's totally true. I mean, how many of you have ever had a trade that went your way, but you got stopped out or you got margin called or something happened? I mean, keeping lower leverage, trading with a smaller risk is the way to go. What do you think about that, Andrew? What's your input on it?
Well, to be honest, but since I've been speaking to quite a few people, literally one-to-one verbally over the last in the last couple of weeks, it's actually quite surprising to me that even people that have been trading for a while are not really sure of the leverage they're using, and obviously leverage equates to risk. And I do generally think leverage is one of the biggest problems that most new traders or unsuccessful traders are stumbling on, is that they don't understand totally the risks that they're getting into. I did that's right. I just did a video which will be out there on YouTube in a couple of days' time once they've edited it. But it was a bit about leverage. And it was basically, a lot of the brokers, certainly in Europe, UK, and what have you, can offer leverage of 500 to 1, 300 to 1, 200 to 1, 50 to 1. But just because your broker offers you leverage, it doesn't mean you have to trade the leverage that they offer you.
Right.
And people that are trading the leverage that they're offered because they can are generally the ones that are going to fail, because they might, two things happen with that, Jason, as far as I can see in the past, is that, trading leverage, you can make a ton of money very early days. And I've spoken to people, in the premium, live people that have told me they've turned £1,000 or $1,000 into 6,000 was the guy I spoke to last week. He might be listening now, so I'm not going to mention the name, of course, and I'm sure he won't mind me using the example. That's a great return, 1,000 to 6,000. I mentioned it to Nick, and Nick's on the chat, and he goes, "Oh, that's the surefire blow up." I mean, and I said, "Well, let me finish the story. He blew up.
Yeah, yeah, that's true.
Because
it's true.
And that's what it is. You come into this using the leverage that, and it works for you. And you think, wow, I've cracked this game. I can really now chuck my job in. Tell that boss to go and poke it. I'm trading forex now until leverage comes around to bite you.
Right.
But the other thing about that about the leverage, in the States, I think, am I right saying, Jason, you can only have 50 to 1 offered 50
That's
to 1?
right, 50 to 1, and then on the exotics they give you 20 to 1, I believe, and that's one of the reasons I haven't used them, because the traders that I worked with in the past weren't big money traders with tens of thousands of dollars. They had a couple grand, $500, and they were not patient enough to trade to make $2 a day with that leverage. So we've jumped around outside. The leverage is one thing that kills us here in the States, but it's also no hedging. You have this first in, first out rule. There's multiple different rules in the US, but leverage is one of those top 3 or 4. The thing that I told someone, and this was, I like that one-on-one mentoring that we're doing, because you and I do our own thing with the traders and we don't really talk about it a whole lot. But I had an example just last week with someone. I said, look, because you can get a broker with 1,001 leverage now. I think I've even seen 2,001. It's just crazy, I mean, if you have the ability to know how to trade forex and click buy and sell in the currency pairs, and you have $1,000 account, and you start making money or losing money, and you want to chase your losses, it's really hard to not want to use up some of that leverage for a lot of people. It's like going into the casino with a bunch of your buddies and they keep following you around saying, hey, we got a $5,000 credit line. You want to use it? You want to use it? And then you lose your $500 and then your buddies are still playing. Everybody in the chat room here is still talking about the trades and you're out of money and you say, hey, you want this credit line? You want, and you get stuck, right? I mean, that's what happens. So having that credit line at the casino is the same type of idea of having too much leverage in your account. When it's sitting there waiting, and you're not even using a tenth of it, it's tempting to want to use more, and that's where you get caught. So,
well, I'll tell you why. Okay, that's just. I mean, I'm reiterating what you're saying, but I'll say it in my way. People that think they've got themselves under control, they're using the correct leverage, they're using the right risk, but the leverage is still there. They still have the ability. It's when they have the losing trade, and they then take that revenge trade,
right?
And they use the power of leverage,
right,
to get back. That is normally the downside of most accounts. They go in with revenge with the trade that's completely outside of the leverage they've been training their mind and trading their plan on, but then they just fire it back with one trade because they can, and that generally
that's right.
is the signals of a wipeout. Right. You said about the States there. Some people in the room may be aware, if you're from the UK, there's a press release last week announced given out by the FCA, which stands for the Financial Conduct Authority. It's like the SEC in the United States. It's basically the governing body for the regulator for the brokers and for the industry. And they're proposing now massive changes in this, and leverage is one of them. Focusing on the CFD market, what we do, and they are proposing that. I mean, there's various different suggestions. So I'm not going to go into all of the different proposals, but one of them actually is that if you've got less than 12 months experience, then the maximum leverage you can have is going to be 50 to 1. And I'll be honest. I know you said, I'll be honest. I think that's good. I think it's good because the industry, the forex industry itself, has got itself a real bad name over the last decade. I
agree.
Because there's been so many brokers out there that are offering this. They're offering mobile homes. They're offering mobile phones.
Right.
Mobile homes. Yeah. They're offering mobile phones. They're offering holidays if you do this and what have you. They're offering massive leverage, which makes it attractive. People can give up their day job with a $500 account. Did you know that, Jason? You can really give up your day job and trade with a $500. So this is what they're offering, and this is really going to stamp that type of stuff out. It's going to stamp out the hype,
right? The
hype that this market has created over this industry has been created for itself over the last decade or so. Yeah. So I'm actually quite pleased about that the FCA are now looking at this, because if anyone's decent, you don't generally, be honest, anyone able to trade or learning to trade this industry that's going to take them into their next career path. They don't need to be trading a 500 to 1 leverage. Right. I can tell you that now. Right. Don't need it. I don't trade with 500 to 1 leverage. I trade with significantly less than that.
Right.
I trade with less than 50 to 1 leverage.
Right.
Very good. Very good.
You
just don't. Yeah.
I agree.
That's what
I
think.
agree. I agree. That's a huge point, and I think it's coming around. It's interesting because now with the whole Trump election thing coming in, the rumor is that he might start repealing some of the Dodd-Frank Act and bringing back some of the flexibility that we had. And leverage is one of those things that a lot of new traders want to have more of. But I'm more frustrated with the other rules that we have here in the States. Since the rules changed in the United States, I haven't traded with a U.S. broker myself. Just so you all know, I use a bunch of different brokers right now. Some of them that I use, they're sketchy. They paid me, but I just had one broker. I don't know if any of you in the room have seen this, but I had one broker literally just yesterday. I logged in and it said, spin the Christmas roulette wheel and get your prize. And you spin the wheel and it's like 200% bonus, 100% bonus, 1,000 to 1 instead of 500 to 1. That's like the prize they're giving away,
Who is it? I want to do it.
Yeah. And then I got an email and it said, please contact support with your verification code to get your 200% bonus. But then it says you cannot withdraw this bonus. It's only used to increase your leverage. We can't, you got to trade, 10 lots for every dollar you get back. The other side of the coin too, I have to chime in with this because it's so relevant. A doctor friend of mine was trading and he was doing really well, and he had some nice funds. He wasn't afraid to put in a few grand here a few times and blow up a couple accounts. But when he would have his account go from 1,000 or 2,000 to 15,000 in a couple of weeks, always lost it. Always lost it. So the revenge trade that you talked about is a huge reason why people lose money with leverage, but it's the other way. If you can turn a few thousand into 15,000 in a week or two, you can't tell me you're going to go down to 0.1 lots from that point. People just don't do that. So the only thing you can do is if you do get fortunate and have some good trades is try to take a withdrawal of some of your money and lock in some of that profit, because it's on both sides. If you win a bunch, you're going to be tempted to use too much leverage. If you lose a bunch, you're going to want to use more leverage. I just talked with a trader yesterday, really cool dude, really nice guy, knows his stuff. And I told him, you can't be happy about making money in Forex if you're not following your plan and controlling your risk, because you're going to get lucky. And it's a fault. It's the hardest thing is psychology. You can do the wrong thing, break all your rules, use too much leverage, make every mistake in the book, and you can still get lucky for a while. And then you're happy, but you shouldn't be happy because you didn't follow the rules. You should be happy if you follow the rules and you win some, lose some, and you stick with it, because that's how you get consistent. So it's just a mental thing, really.
It is, but it's also very, very real when it comes to real money on the line.
Mm-hmm.
And I would encourage everyone in the room, to be honest, Jason, everyone here today, is to actually analyse their risk. How much they are risking on a trade. I spoke to, in fact, 2 people this week that didn't actually understand that you can position size.
Yep.
I.e., that you don't just have to do one lot. Now, if you've got $1,000 in your account and you've got 100 to 1 leverage, well, you can trade one lot. Yeah, you can trade a full lot with 100 to 1 leverage with $1,000 in your account. Okay, but then for one lot you're risking $10 a pip if you're trading a dollar pair. You're risking $12, $13 pretty much if you're using a pound.
Like the euro pound or something.
Yeah, euro pound, exactly. Yeah. So you're using massive risk with $1,000. That's a 10 pip move. Mm-hmm. A 10 pip move on $1,000 account. You've blown 10% of your account.
Right. And then you got a couple pips for the spread. You're already down 2-3% just when you get in. Yeah,
exactly.
Totally true.
So people that are trading $1,000 account. Well, it doesn't matter what level you're trading at, quite honestly, Jason.
Right. It could be
whatever.
Yeah.
If you're trading, most people in the room, I assume, are not trading $100,000 accounts.
Right.
So I assume, I don't know, I haven't really, but I assume most people are using $1,000 or $5,000 or $10,000, something like that.
Right. I think that's pretty fair. Mm-hmm.
Yeah, and I think trading 50 to 1 leverage is enough, way enough. And I'd even suggest they move it back down to around 25% leverage, 25 to 1 leverage when you're learning on this. That's my suggestion. Yeah. Because at the end of the day, you've got to look at your long-term objective. Is the long-term objective to buy the speedboat, to have a gamble? In which case, then use the leverage. But you realise it's a gamble. Remember, I told you that story a couple of in the pit with this guy. His name was Trevor. He did this trade to Rio. Yes. If it worked, great. He's made into money. If it's wrong, he's on a jet plane. He's out. He's on a plane to Rio de Janeiro. Never seen him. Well, that's the same type of thing. Using leverage. I know. If you're using leverage, make sure you know what the game is. If you get it right, okay, go and buy your speedboat. If you get it wrong, get the hell out of here because they'll be
Right.
coming after you.
Right. And it brings up another good point it's somewhat related. This last week, for those of you who know me in the trade room, because Andrew and I don't get to see yours as much because you're on in the middle of the night. I haven't traded a lot this week. I had a great, last week, and my trades closed out, did really well. But the day before the news, the day of the FOMC and all the news, and last night and yesterday, I've been sort of sitting on my hands a little bit because the markets are still finding their way. And a few people said, hey, you need to post some trade ideas here. You haven't put any ideas out to us. What should we do? And, so what do? I start putting out a couple trade ideas, and then they get stopped out right away. I'm like, well, and then one of the comments on there was really good. And I think, I'm looking for the name here. I know it was in the room, but they said, oh, they wait till London to determine the move. And I said, well, London is 2 a.m. here. I'm not able to do it. So if I were trading by myself and I wasn't under the spotlight of this room here, I would have probably waited to get in a couple trades to maybe later today or even Monday. However, the whole point of the comment is leverage. I mean, if you lose a couple trades, it's not a big deal. I mean, what are you out? 0.25%, 0.5%?
Exactly. If you're using the right leverage, then the one trade that you're in, this is where all the psychic comes in, Jason.
Mm-hmm.
If you're trading that type of leverage of 0.25%, 0.5% risk leverage, same thing, then you're not bothered about that one trade. And if you're not bothered about that one trade, then you should be able to trade with less affected by emotion. As I've said many, many times, you can't trade without emotion. Everyone does.
Right.
But you can trade. You can get control of it.
Right.
If you're not over leveraged. Right. If you're over leveraged, it just I can't swear on mine, can I? It just plays with your.
That's funny. That's funny. I do have a question for you, Andrew, though, because I want to know this myself, and I had a couple of people ask me last week. They said, if you have multiple signals, confluence of all these different levels and fib levels and support levels and other pairs, and the news is where you want, if everything lines up, do you put on more risk per trade?
No.
See, I do at times, but it's not a lot. You're going from a quarter to a half or something. So that was why I wanted to ask you, because I think from what I know of you, you're always the same risk no matter what, right?
I don't put on more risk, and I'll tell you why. Because as much as I think I'm reasonably intelligent and reasonably disciplined, I also have to admit I have no idea where the market is going over the next 10 pips. I have no idea. Right. And if I did have an idea over the next 10 pips, then I'd bet the farm on it. Because I don't know. Because I don't know what's going to happen.
Right.
I might have all the confidence under the sun, but at the end of the day, the next. If I'm on an hour chart where the average true range is around 25, 30 pips or something like that, the big scheme of things, it can go absolutely anyway. So I'm not saying anyone else that doesn't agree with me is arrogant, but I'm not arrogant enough to think that I know this one's going to work out better than the other one. Personally,
that's good.
So I don't.
I had to ask you that because people were asking me what they thought you did, and I said I think I know, but I'm going to ask them in person. What do you think? Is there anything else that you want to cover about leverage? I mean, there's so many. We could talk for hours on this thing, but I want to look sort of at the chat. I think there's a couple questions coming in. But
let's look at the chat.
What's funny is I only saw the chat because I see it behind your head there on your monitor up on the top left, and I see it going, and I wasn't sure if there's questions in there or not. So,
okay.
Let's take a look here. I don't want to. We want to be interactive, right? And
okay, let me just You mentioned something about the markets there, about FOMC and all that, and it's been a very not whipsaw. It's a very strong, trendy market for dollar and massive news and stock markets hitting 20,000 or just a smidge off 20,000 and so forth. And part of my stream yesterday and today as well, before I started coughing myself out of it, was I still generally, I'm still going with my trend views. But because it's because I trade what I see on the charts, because I actually think this dollar might be coming in for retracement now. This it's a massive overextension now coming into the end of the year. So although I'll continue to trade, I'll still trade my risk, but my stops are further away.
Okay.
Because I think we can have snapbacks.
Okay.
Quite aggressive snapbacks in this trend.
Okay.
Got it. So because I'm moving my stops back, but I'm obviously position sizing less. So my leverage is staying the same.
Okay.
Risk is staying the same, but I think the markets have changed. In other words, I don't think the dollar's having. I mean, It's just it could have a very violent snapback.
Right.
Yeah,
right.
you could see the back, snap back down to dollar yen 1500. No problems at all. 1500 on the back of nothing.
Right.
That's 300 points from it.
Right, right. Then that's
so
what happened last time too. If you look at that news, that's what happened last time. I was showing in the news from the talking head analyst. They said, "Why did dollar yen drop 150?" And they said, "Well, because it was due." I mean, that's sort of all the reason. So with your strategy, like you said, you're not. Are you going to be looking to sell against this strong, powerful trend, this parabolic move, or only to buy with bigger? Okay.
I can't do that. I can't do that. I can't go. I'm not counter trend trading. I said to someone on the Skype.
That's what I think you're saying. So that makes sense. Okay, good. You're just going to keep going but longer stop. Yeah.
Longer stops and wait for the trend to really change at the moment. I go with the longer trend, and I just have to use wider stops in this environment where the snapbacks are going to be more violent. I don't. I've nothing against counter trend trading. I know from some very successful people. In fact, one of them is particularly more successful than I am, certainly in terms of his wealth in trading. And he's a counter-trend trader. Nothing wrong with that at all. But I know how it affects my emotions.
Sure.
And I know that I start getting, I said to you, emotions, you've got to be in control of them. I know where my weak points are.
Sure.
And my weak points are when I've taken these counter-trend trades. And that's where I get, so that's why I just don't do them. So yeah, I'd rather do nothing. I'd rather do nothing.
That's a good point. And it's basically worked. I mean, if you look at the dollar yen, if you're trying to sell, you're really not doing, and I don't mean right now, I'm sorry, but I mean over the last few days. I mean, if you're looking to sell, you're not doing that great, right? You're really not doing that great. All you can do is buy the retracements, buy the dips, and wait for the trend to change. And the whole plan, I'm assuming with your strategy, is you get enough winners going up all this way that when the trend does change and you have a few losers, you're still ahead,
Well, that's exactly it. I put a trade record out yesterday buying dollar yen at 116.50. But I have not placed the order in my main account. But my level for pullback in dollar before I'm comfortable buying the dollar yen at the moment is at 16.50 level, which is still 150 points away from where we are at the moment.
Yeah, you got it. You got it. You got it. I saw a question here, and I'm sorry, I haven't even refreshed the chat here. I know there's a bunch of them, but I just saw one that said, basically it said something in the order of, are the rule changes in the U.S. or the ones that are maybe coming to the U.K., with the cutting the leverage back, is that to protect the brokers or to protect the retail traders like us? And, my opinion is both. I mean, if look what happened with the Swiss franc, and all these brokers that went under because they basically were quote unquote sort of bucket shops and they didn't have the margin to pay people out. The other thing is if you're not there trading, the brokers don't make money. That's just the way it is. So they want you to stay around longer. And I think if you were running a brokerage, would you want to have hundreds of people trading little bits all the time, or a few that, blow it up, you make your money, and then you got to keep finding new traders? So I think it's both. I really do. What do you think about that? I mean, if they lower the leverage, is it for the broker's best interest, or is it for our best interest as traders?
You're bang on, Jason. It's absolutely for both. The financial conduct authorities do not like missions that regulate, same as any regulator in any of the developed economies. They want to protect their industry, right? With the customer at the forefront of their mind, but they want to protect the industry. So they don't want to see brokers go out, because then you have other brokers being unstable, and then it's just like a mini banking crisis, and they want to try to avoid that at all costs. Of all the brokers going belly up. So so it's definitely protect both. The other thing that FCA are doing, actually, they're really putting the drawstrings on binary options. I don't know if anyone trades binary options, but they're really. That's a big industry.
Yeah, that was a big scammy thing that went on for a long time. It was just you only have to click win or lose, but then they take a bigger chunk if you win, and they don't, or something.
They're advertised on television. They're advertised on some of the main websites. Bloomberg has I don't know if he's there still, but it's a big industry, and and they're not all bucket shops. Some of these are big companies doing this. I think IG Index, for example, IG, they have a binary option there to open up a binary account. I know my broker I'm using at the moment, I'm putting money out of it this afternoon, hopefully, if they can actually send me an email, say they've moved it back into. But anyway, I'm still waiting for that. But I know they offer the binary options as well. So the FCA are looking at that as well to protect the customer,
right?
Because the customer really, it's not an investment for the customer. Right. It's basically a gamble.
Right. That's right. That's why they're
protecting the customer. So they're going to pull the drawstrings on pull up the drawbridge on binaries, or certainly over increase the regulation on it to protect the customer. So I think the answer to that is both. You're totally right. Alpari at the time, if you remember Alpari, they were not what you considered to be a bucket shop.
Right.
Right. They were sponsoring some of the major events, financial forex events around in the UK, around the world. They were a big player, and this will obviously wipe them out. So
yep, I had an account with them way in the past, as well as FXCM in the US. They had the UK arm where all the American clients would go because you didn't have all the rules. Well, it didn't take too long for that to change, But I saw something on Facebook a week or two ago, and you probably, a lot of you probably seen it because I think people are sharing it all over. But it basically was a little video, and it said, if you're using a product, whether it's a website like Facebook, whether it's a chat room or a forum, or you're trading or using any service, if you're not paying money for that, you're basically the product, right? I mean, on Facebook, we don't pay anything. We just do our thing. It's all free, but we're really the product, right? Because you get all these views, all these people, so they sell ads based on us, and it's the same. I mean, we're like the product for the brokers. So I encourage traders a lot. I've done this a few times in the past where it's worked. I encourage traders to try to negotiate with their brokers a little bit. I mean, if you got a somewhat sizable account and you're trying to decide which broker to use, call them up and say, hey, this guy's giving me this guy's giving me this. What do you want my business or not? Sort of like buying a car,
Well, actually, Nick has done all that for us. I think he's done all the negotiating, obviously, because the intention is that more people use these well-established brokers,
right?
And he's got some great rates. So I encourage people to check them out. I mean,
right. Yep, I'm trading with FX Choice now in the U.S. I mean, that's the thing. The thing about the U.S. that's hard is the broker that they use, FX Choice, isn't regulated in the U.S. So what we've been telling people to do is, do what you want to do, but if you want to test it with a smaller account, test it, do some withdrawals, some deposits. I mean, they're good. I trade with them. I've withdrawn from them many times, and they're not a regulated broker though. So you got to use your own discretion. So I'm thinking in the next month or two, I really feel like the laws are going to change in the States eventually, and I don't know how much better or worse, but I think we're going to get some of our flexibility back. So,
yeah, well, that'd be good to see, certainly for the industry. But I mean, I'd love to see all these bucket shops getting wiped out. All this.
I see a couple questions here. I use FX Choice here in the States. I also use Pax Forex and a couple others here. It says Andrew Jason question, and again, I'm sorry if I'm out of order. You might find some of these, Andrew, better than me. A user was down 10% due to a bad hedge. What advice would you give people in this situation? To cut it if you're down 10%, hedge the position so your risk is constant, whichever way price moves, or keep the positions and trade slowly back into profit? My opinion on that is to cut it, and that's just what I would do. I would cut it, or I would let's say you're, I don't think you mentioned a pair, but let's say you're in the euro dollar. You're down a big chunk. Here, 10%, obviously big, right? What I would do is cut it, or if you think it's a good trade, do your other trades in your other pairs, and if you can make a little bit in one, then you cut out in the other and scale out of it. What would you do, Andrew? I mean, I think I know what you would do. You'd say, number one, it wouldn't get that bad.
Yeah, exactly.
Number two, you'd
exactly
cut it. Do you ever, I mean, what would you do? I mean, I don't think you
hedge. You're totally right. I mean, take the education hat off, if you call this talk education or whatever you call it, it's a chit chat.
Right.
But to take that off, I wouldn't get myself in that situation where I'm sitting in a trade that's 10% down.
Right.
I've got to put my kids through school. I can't afford to be 10% down on my trading on a position.
Right.
So it wouldn't get there in the first place. Now, I mean, I know. I think I don't know if you do or not, but I don't personally hedge a trade. I'd get out of the trade before it got that bad and just put it aside and say, so that's one of my losing trades. I'll get on to the next one. Yeah. That's the way I trade.
Yeah. I don't hedge either. I tried it. I did okay. And I think I talked about this in one of the free videos we did. I studied it. I actually got a book on it. And just because it's part of being a good trader is knowing all the things that are out there. It's not just for teaching or for talking with other traders, but if you don't know what the heck's out there, you don't know how confident you are in what you got. You always think there's something better. So,
I mean, obviously, people that know me or don't know me, I used to work on the trading floor and the trading pits, and hedging was just not an option. So so my trading, although obviously the world is very different since I've become on the screens, electronic. But at the end of the day, I'm still inbred to be the trader that I've always been, and we didn't have the hedging capabilities. The hedging. if there's any type of hedging on the floor, it would just basically don't put the card into the matching engine. You just put it in your pocket until it comes back.
Right.
That was a hedging there. You just threw your trading card away.
Yeah, I hear you.
I wouldn't get myself in that situation. And I think NFX does. I think he does hedge. I think you're a hedger, aren't you? NFX, you like to hedge, but it's not something that I get involved in myself. But I'd certainly, if I was in that situation, cut it. Look at the market. There's many more opportunities out there. Start again.
Right.
It can almost cripple you to get involved in other stuff if you've got that one sitting there on the back.
Yep.
Stops you from doing other stuff.
I agree. I do have a question here too. Ryan said, Jason, and I like the caps. Thanks for writing capitals because it sticks out a little bit. One of the people said, let's do some trading, talk about the markets. We'll do that here in just a minute. It says, Jason, you use an unregulated broker, ? I've used these as well until the company I worked for that I traded $460,000 for a loss because of one of these brokers. The broker at the time had a good reputation. You are never safe. How do you plan to deal with this risk? I have a really good answer for that. I don't let big chunks of money in my account. That's it. That's all is to it. I withdraw because with the brokers that I use that aren't in the US, because they allow me to not use the FIFO rule, first in, first out, because they have leverage that's way higher than the US. I don't need anything greater than 10 grand in an account ever with the offshore brokers or with the non-regulated brokers. I wish I could use a regulated broker and do better with them, but I don't. I choose not to do that. And I have been paid out every time with them. I keep my account balances low. And I'm in touch with them. I probably get an email back and forth from my account manager probably once a week, sometimes more than that. We do Skype calls and things. And I have worked with so many brokers, and when I say so many, I mean probably 6 to 8, maybe 9, that aren't in the U.S. that we had to go to as the U.S. rules change, or we chose to go to. And when all of them cut U.S. brokers out, our U.S. customers out, we still got our money. I mean, because they had other business with the rest of the world. I mean, they didn't just close their doors. But there can be scams out there. So I don't keep $460,000 in an account. I wouldn't manage client funds with an unregulated broker in some, crazy country. But with my own account, you have a few grand in there. That's enough to trade. You got enough to do your trading. And then I keep withdrawing. So that's what I do. Is it better to be in the U.S. with a regulated broker? Yes. But you control your risk, so my advice is to spread it apart. So I spread it apart a little bit. Let's see. Let's see here. Brokers. Yeah, FXCM.
Yeah, while you're looking at that, Jason, I totally agree with that. I mean, I have a reasonable size account, but I have protection under the FCA up to 50,000 in the UK and 30,000 euros in Europe. I have this is a regulated account as well on this side. It's only 12,000. But if I had 460 grand, I think you'd have to certainly look at regulation.
Right.
But even 460 grand, I mean, no regulator protects that type of size anyway.
Right. Right. Here in the States, I know when you have a bank account, I think you get insurance up to what is it, $100,000 or $250,000 on your bank account, not a trading account, on a bank account. So if you're gonna have a larger account and you want to build up an account to trade full time off of, my advice is to use a regulated broker in your country and be comfortable with that. Because to be honest, you don't need leverage if you got $100,000 account. I mean, you don't need, even if you trade several lots, you don't need any higher leverage at all. Yeah.
Okay, so where are we looking at now, Jason? What are we up to?
Well, I'm just looking through. I see, there's some chat here. Do you want to give your opinion on the markets a little bit here and talk about things? I mean, what do you think?
I'll tell you what. I did place a trade. What do you call it? Trade idea in the
dollar CAD.
Dollar CAD.
Yeah.
Can you put it up? Maybe I can't put it up. Well, I can, but you won't see it.
Yeah. I'm following you on this forum, by the way, or this chat room, Andrew, so I get an email whenever you place a trade idea. It's sort of nice. I don't know if you guys know that or not, but you can follow another member, and then when that happens, you'll get an email anytime they post a trade idea. So, for example, I got an email this morning, and I'm only telling you this. A lot of you guys know this already. Some of you don't, though. I got an email from ForexSignals, and it said, Andrew Lockwood is buying the U.S. dollar Canadian. Here is his idea. And I was thinking, okay, it's sort of cool.
It is cool, but that's why I do have a bit of an issue with it. And
I know.
We don't want to trade my issue because I'm going to continue placing trade ideas and more trade ideas. But here's my issue. everyone's. I presume most of us have grown up in this room, so we can all we all control our own lives. So I'm not telling you what to do, but I'm not expecting people to follow my individual trade ideas, because it is a one trade idea to give you an insight to how I trade, not that particular trade. Because as I said a few times, maybe even on this call, one trade is insignificant to my pool of trades. Right. Okay, but you get to know my theory and my thought process when I'm putting a trade in. Right. So this Canadian dollar fitted into my process. If you can maybe pull up the chart for the screens, but if you pull up the US, if you pull up the dollar CAD on the daily.
Yeah, I'm gonna pull it up here for you. Let's do it. Let's see, properties. Let's pull it up. Here we go. And I will pull up the dollar CAD. Here it comes. All right. So we have the dollar CAD up here on the daily time frame right now.
Okay, so you can see we've been in an uptrend, basically pretty much since midway through the year, May, June, July. We've been in this uptrend. Now, of course, with the OPEC and all the oil hype that we've seen over the last few weeks, and it came to its culmination this week with, or last week when OPEC agreed on cuts, and then the non-OPEC countries agreed certain cutbacks as well. And oil had a major spurt up, and I think NYMEX went to about $58, Brent went to 54, something like that. Oil's had a good shot at $60.
Yep. I just showed crude for a second too, so they can sort of take a look. Okay. But I think
so So oil's had a good shot at it. And now, the last time I looked, when I put that trade idea up, I haven't got my screen, but the oil's come back. This is a trendy market that I like now, and I think that the Canadian dollar is in time for a bit of a pullback. Consequently, the US dollar CAD for me is a buy. So I put my buy in, but I'm buying a pullback. Remember, we've said that we've got sharper moves now in these dollar-related pairs because of the overextension we've seen in the US dollar. So I don't want to get too. I'm placing. I want a reasonable size pullback in this for it to continue. And my pullback on the dollar CAD is at 133.18, something like that level. Is that right? And it's now trading at 133.70. I think it was trading less than that at the moment. So we still need a good 60-point pullback for me to enter on this. Okay. But the reason why I put it down is, you've seen where my stop is and you've seen where my risk is. I realize I put in a profit target which is very, very achievable.
Sure.
Very, very achievable, which is still just below the 134 level. It's below yesterday's high. Okay, it's very, very well achievable. In fact, might get there today and not actually get me in the trade. That's fair enough. It just carries on without me. Right. But if this train comes back, I'll jump on around the 18 level, expecting a continuation on that. And that's basically why I put that in. But because my stop is, on the example, I think it's 50 pips away, and my profit target is 80 pips away, it's a risk reward of 1.6. To 1.
That's a good one. That's a good one.
1.6 to 1. I can take all day long. Bearing in mind, I have no idea what's going on in the market. But that's trending in the right direction. It's a reasonable pullback, and there's a bit of fundamental reasons behind it as well. I think that oil might, I think it's seen its day. So that's the trade idea I put on that. But again, as I said a moment ago, I don't expect people to go and follow this trade religiously, because it's just one of the pool of trades.
Yeah, and you bring up a good point there too, because in the premium room I showed the trades that I had on, and I had a sell on the Euro Aussie and a sell on the Euro Pound, and I literally had to flip a coin to get a trade idea. I'm like, do I put the Euro Aussie trade on the trade idea or the Euro Pound? And of course, the Euro Pound's in profit, and the Euro Aussie, the one I posted, stopped out. It's just how it goes. So definitely, it's hard, because I brought this up before too. If you come into a trade room and you see these quote unquote mentors posting a trade or two, a day or maybe 3 a week or something, automatically you say, oh, I'm going to get in on that trade because they know what's going on and stuff. But you have to understand, I don't know if you saw on Skype, I Skyped you over, the guy, Andrew, I was talking to yesterday. He said when Andrew opened up the opening day and you had those 2 or 3 losers in the beginning, he was absolutely and honestly said he had more respect from you, because he bought a course before that was thousands of dollars, and the guy never showed a freaking loser ever. And to see you show a couple losers on the opening day, he thought, hey, this is the real. What else can you think?
I'm not embarrassed by my losers. I'm
No.
not at all ashamed of them at all. I mean,
Right.
I've got no problems. Honestly, it hasn't happened for a while, but I have no problems telling you. If you're all still in this room in a year's time, listening to me rambling on, I will show you a spell, and I have 10 losers on the bounce. No problems at all. I'll show you that. You know, I'll have no problems, and I will show you that one if it happens. I don't actually want it to happen, but I know it's going to happen.
Now we can't wait for it, right? No, I'm just kidding. I'm just kidding. Yeah.
No, but it's going to happen at some point. I am going to have a losing spell. That, I mean, it's so insignificant to me, Jason. I don't even remember the trades that you mentioned. Yeah. I can obviously go back to the archives and look at them, but I don't remember them because I put them aside and I moved on from that. But I don't have 90% successes. I don't have 70 or 80% successes. 6 out of 10 is good for me. But I'll have more on the wins than the losers, and not massively, not 5 to 1, 6 to 1.
Right.
But I'm in here for the long haul. It's nothing exciting actually. When I go out, my mates all obviously know I'm a futures trader by since I left school. But now they know I sit at home trading FX, and they think it's a glamorous life because I don't have to go to work. I sit at home and take the kids to school and all that. Well, that's the only thing that makes it glamorous is the fact that I can go to school with the kids. The actual sitting in front of the screens all day long is pretty boring.
Yeah, it is. And we talked about that in a couple of, I think it was 3 of the one-on-ones I did. It was one of the key topics is if you're going to be consistent and successful in Forex, a lot of times it's not flashy or sexy at all. It's boring. And that's why it's fun to have other people to talk with. But when you're talking with other people, you don't want to have them change their idea. One of the things the trader told me just yesterday is that he would get distracted in the forums at times because he would have a certain trade that was going the wrong way, and then you'd see 3 or 4 people in the forums or chat say, hey, we're gonna hang on because this or that, and then he would hang on and lose more. So you got to trade your plan and stick with it and not get distracted from what other people are telling you online. But take all that information and distill it into your own, and you'll realize that a lot of times you do better just trading your own plan, especially when you're trying to quote unquote test, a trader to take their trades, because I agree. I mean, there's definitely losers. I mean, you take my silver buy that I had, I got really lucky with that thing. I bought silver at the very top and it came crashing down. I got out before FOMC and I ended up making some money on it, but it was just the razor's edge. I mean, and that's where I talked about gambling and things, where if you just would have waited for the news, you would have lost your shirt on it, So,
just look at silver now.
Yeah, I know.
And FX says to me, what you see, what dollar CAD, what's my profit target? Dollar CAD, it's just before the figure. It's in the trade idea section.
Yeah. I think you posted the trade idea. I don't know what it was.
Just 3 pictures for the figure. What? Let's have a look. It is 133.97. Is my first take profit target.
Yeah. Tropical Phil said, "Hey guys, can you take a look at UJ dollar yen?"
Hey, pull up UJ. Well, I'm just saying this. Because I'm 50 pip stops away on this dollar CAD. Well, if I get executed, I'm not a keen meddler of positions once they're open. But I'm 50 pips away on a stop. I will certainly tighten that stop up as I get into profit. I don't want to be on a 1-to-1 and then give that back.
Right.
Or certainly not become a losing trade. So the wider the stop I am, then I will move. I will tighten that stop up. But if I'm trading tight stops, 15, 20 pips, then chances are I won't necessarily be moving that. I'll just go for the. If it's say we're 1-to-1 and 1/2-to-1, I'll still just go for the profit.
You got it. I have dollar yen pulled up here on the screen for everybody, and I'm looking at the weekly time frame right now. And if you look left on the dollar yen, you can see we're coming up into this really hard area of resistance right now. It hasn't had a care in the world about resistance so far, but if you look at that sort of head and shoulders on the weekly there, that happened a while ago, we're coming up right into the high neckline in that area. So we do definitely have some key areas. But if you look at the monthly time frame, it all looks a little bit different, right? I mean, so to buy it right now, the only way you can buy it is to buy it on the pullbacks. Do you have any trades going on the dollar yen yourself, Andrew?
I don't know, but I'm looking at what you're talking now. I mean, I'm just looking at the daily on the dollar yen.
Mm-hmm.
Yeah, I put a trade idea out, but not posted. But I've been talking about it. 116.50 is my level to buy dollar yen. Mm. So I'm not buying it at the moment. Mm-hmm. I'm looking at the daily, and I'm looking at I think this level here, 118 and a half. It's definite resistance in here, at here. So if you look right, left, back down to March 2015, again October 2015, beginning of the year we hovered around this level. This is a key level. Now, I'm not, as I've said before in the past, a keen counter trend trader. If I was a counter trend trader, this would be a level where I would be thinking, hang on, a risk reward.
Right.
It might be worth taking a counter trend on this one with a stop 50 pips to the upside.
Right.
Because you could see it pull back 150 points.
That's right.
You could easily see it pull back 150.
Right.
Now I'm not a counter trend trader, but I'm respective of other people's strategy.
Right.
So if I was going to play this now at this level, if you're going to hold a gun to my head, I'd play it to the downside and on a risk reward, because I think if it pops through, we're still going to see it pull back around to these levels. I think if it pops through, you still have a chance to get out for a small loss.
Mm-hmm. That's exactly what I was talking about with silver last night. Is you sort of have to catch a falling knife here, but we have this really strong area of support on it. And if it goes down below that, you're wrong and you know what your risk is. But the upside is so much bigger. And then that's where, when things get overextended like this, it's tempting to try to go the other way. But if you would have done that, this whole last week or two, you would have been kicking yourself, And one of the things I mentioned in my stream last night before we had issues with the chat and internet and all that stuff was, if you look at the dollar yen, I pulled it up the 15-minute chart here. There's a reason why the 15-minute time frame only has a 30 pip range going back, for the whole day. And that's because traders don't know what to do. You got a lot of traders who are long still holding their positions. You got traders who don't want to sell a super strong parabolic uptrend. And you got other traders who want to get in, but they're waiting for a pullback. And what happens? You get indecision. The market sits there flat like this because everybody's waiting to see what happens. So this is where you get that volatility and you get those whips. I mean, if it starts coming down, you see people say, okay, it's coming down. I'm going to start selling. But then you also see the buyers saying, hey, we got a better price to rise. So when you see this flat line like this, obviously you have indecision in the marketplace, and that should give you an indication of what all the traders in the world are doing on this pair. And it lets you form your own idea. If there's a lot of indecision, maybe you should have some indecision too, So, I mean, to buy or sell,
capital preservation.
Yeah, I mean, really, if you were to buy or sell right now, I think, Andrew, you'd agree with this, and be brutally honest and tell me if you don't. I think if you were to buy or sell at market right now on the dollar yen, I think it wouldn't be the best trade. I mean, you're basically buying at the top, or you're trying to call a top if you're selling. I mean, you got to wait for something to happen, and that's what everybody's doing.
Well, that's it, and you're totally right. You look at it on the 15-minute chart. Because I said, this business is quite boring. It's very easy to just try and pull trades that are not there. So, one of the best trades sometimes, as we know, is to sit on your hands and possibly dollar yen is at the moment. That's why I'm just not in it.
Right.
Quite often happens when you have this big high impact news that we've had this week, this week, oil last week. Obviously ECB, and then now we've had the FOMC. Quantitative easing going out in Europe. It's been a massive 2 weeks for the markets. There's 52 weeks in the year. We've had two of the busiest times data out in a 2 week period.
Right.
As far as I'm concerned, I've got the Christmas tree up. It's getting cold outside.
Yeah.
I can almost hear the carols. It's almost a run into Christmas.
Yeah. I hear you. I mean, we talked about this before. If you didn't hear it, I'll give you 5 seconds real quick. We got there's always stuff going on in the markets, right? There's always weird things. There's always reasons for excuses and things, but we have the Trump coming in the office in a month. We got Christmas, New Year's. We got all this big news. The market just sucked up all this news, and the U.S. is saying they might raise rates more next year. Who knows if they will, right? And we have this lower liquidity time where a lot of the big banks and hedge fund managers are gone from Christmas to New Year's. So if you're a new trader, don't get too frustrated if there's either not much movement in the next week or two, or there's these whips and you keep getting your stop hit, but you're really right in the long term. Just be a little bit more conservative, I
And
do
above
see.
all,
Oh, go ahead.
watch your leverage. Yeah, sorry. Yeah, go on.
Yeah, watch your leverage. Watch your leverage. You're right. There's one here. It says, "Ed Jason, what about the Euro USD in the long term?" Euro USD in the long term, I'm on the boat where it's going to be going. I think the parity. I really do. I think it's going to go down. I mean, the euro got beat up by Draghi. The dollar got really strengthened up with the potential rate increases. I'm sorry, I'm trying to get the Skype back up here. Okay, now we're back on camera again, Andrew. But I think euro dollar is going down. And what I've chose to do is not trade the euro. I haven't placed a trade on the euro dollar for probably, I don't know, 3 weeks, 4 weeks or so. I've been doing euro pound, euro Aussie, trying to play the euro weakness aside from the dollar, because to me the dollar has been just too unpredictable lately. There's a
someone's asked me here. Mainsail has asked me a question in the Swiss
yen. I was just
yen.
looking at that one. That's good.
Yeah. Sorry. I haven't got a position in it, but I mean, I've just pulled up the daily, and it's one. If you look what's happened in the since the beginning of November, that type of chart historically I just love that type of chart from November the 1st to where we are now, when we're so far away from my 20 moving average, which I use as my trend tool. Mm-hmm. I love that type of trending chart now. So obviously I'm going to be buying this one, Mainsail. You've been long for a month, so it's a big swing trade.
Right.
I think you are. If you look back to April this year.
That's the Swiss yen you're talking about, right, Andrew? Swiss yen?
Are you talking about Swiss yen? Yeah, Swiss yen. Yeah.
Okay, good. Thanks.
Swiss yen. So if you look back to March, April of this year, Mainsail, we've come into big resistance. So it's going to take something to push it through here. I mean, it's a level, the 114.5 level has been respected.
Yeah.
So many times. So I don't want to get. You've been in that position for a month, for months means you've got some good discipline on that. So I don't want to start calling it for you. As far as I'm concerned, I would not be buying a fresh new position here. In that because of that big resistance level. I think you could possibly see a pullback. And then I would like to get back in on the trend. So as a person that has no current exposure, I would be I'd be inclined not to buy at this level. So that doesn't mean I think it's not going to break through, but it's going to take something to break it through. I mean, it had a pop through, didn't it? Yesterday. Had a pop through yesterday, and we're back again now. So in terms of macro world, Japan are pledging to keep their interest rates negative or zero. That's their interest rate policy. The yen is a weak currency. The Swiss tends to follow the euro. I think you're picking two reasonably weak currencies there. So it wouldn't be my preferred play, to be honest. But if anything, if I was to call it, without looking at this chart, I would say the yen's got more pressure next year than the euro. But then, it all depends on not the euro, the Swiss. But we'll see obviously how it pans out. But I would be more inclined to think that that's going to continue on a macro picture, although we've got big resistance at these levels. I know it's not a defined answer. My defined answer is I'm not buying at this level, but I still think the trend is up.
Yeah. I would agree. Swiss yen, I don't trade myself. I don't know, but I did look at the chart with you, and I agree with what you're saying about it. Looks like a good opinion. Let's see. Is there any other question that anybody has here? I'm going to scan through the chat. I don't know if you have been, Andrew. I'm not sure.
Look at that chart. Can you see that chart? This is the 4 hour on that Swiss yen. I mean, I don't trade it so much, as you can see. It's all new to me. But it's almost like a trend line.
Yeah, I see it. It's perfectly straight up, isn't it? Yeah.
I mean, that's a great. Maybe I should pay more attention to this pair. What's the spread on that? What's the spread I get on the Swiss? 68.71, 3 pip spread. That's not too bad. I'm changing this account anyway.
Yeah.
Okay, Jason, have you got anything else? Almost up for the hour now.
No, I'm good. I don't really have anything else. I mean, basically, my bias is my overall bias in the market is short euro pound, which is just sort of sticking around. I had the chart up just briefly for a moment. The Euro Aussie short that I posted this late last night was stopped out, so that one I'm out of. The Aussie dollar, you can see, is really having some trouble here. I mean, it's fallen off a cliff basically. We never got up to my quote unquote sell area that I wanted to have for the last week or two. But Aussie dollar is really, it is basically about to take out the last support level since back in June, the summer of this year. So I still think Aussie dollar is going down. We were saying 73. Well, it's at 73.14 now. I think it's going to go down to 70 or 71 cents on the Aussie buck. Euro, I'm still shooting for parity. I'm not in it right now. I'd rather trade against other currencies than the dollar. Dollar CAD is sort of similar to me with dollar yen, although I do like the odds of crude rising, which would pull down the dollar CAD. I think selling Euro CAD is a better idea. So I guess if I had to sign off on this little chat session with you, I think the trades I'd be the most excited about, just myself, is a sell on Euro CAD, a sell on Euro Pound, and keeping an eye on silver and gold. Because what do you think?
Jack says, yeah, well, that's I've got I still think I've got to go with the dollar strength, and but I'm reluctant to get too involved at this stage because I think we're going to have some sharp setbacks. So anything else that shows strength against each other, then I'll look at it. I mean, the Aussie. If you look at my strength chart, Aussie's, Aussie, New Zealand, they all came off yesterday. There's things going on in China and what have you. So I think those are the pairs I'll be looking to sell. Looking to buy British pound against them, basically, a bit of strength against them. I hear what you're saying about oil prices, CAD. It's not. I personally think oil's run its price, but I'm not trading what I think. I trade what I see.
Right. You got it.
So I'll.
You got it. I did have one more question here that we got it just down from Jack FX. He said, Jason, Andrew, what Forex books do you read? Gosh.
I read one. It's on my Kindle. Where's my Kindle? Oh, I'll tell you, it's Mike Douglas or Mark Douglas. Trading in the Zone. I read that one a couple of years ago. 2 or 3 years. I think he's passed away now. That late great Mark Douglas, is he?
Yeah, I'm not sure, but that's one of the all-time great trading books. I mean, it's a good one. Trading in the Zone. Mark Douglas, good one.
Yeah, I read that one. Another one I read was it's on my bookshelf. Hang on.
Sure. I was just going to do the same thing. I got my bookshelf behind here. I was going to look behind. I got a stack of them. But there are some better ones out there, there's no doubt. Yeah.
I bought this one. In fact, my wife bought it for me. This one here.
Oh, cool.
I haven't really opened it much, but
is it Forex or just trading in general?
It's just trading in general. Sorry, yeah, trading in general.
Nice.
She bought it for my present wallet, but you can see I haven't even opened it.
Is that written by a doctor too? What's up with that, huh?
Dr. Alexander Elder, yeah, he's written a few of these.
Oh yeah, look at that. Yeah, that's a cool book. I'll have to check it out. But
I tell you what you don't need to do is you just do not need to be spending tons of money on people telling you how to trade. It's all it's all there in books and what have you. But that's not how you're going to learn to trade. You're not going to learn to trade by reading a book, though.
Right. Right. But it is good. I mean, with Christmas coming up, if you're in this room, it's a great little thing to say to your significant other or family member what you want for Christmas. Throw a couple trading books in there. I mean, they're not that expensive. It is sort of surprising to me, though. There were a few trading books that were like $100. I was like, man, oh man. But a lot of them, you can pick them up. And my advice is get a couple on psychology, like Trading in the Zone. That has nothing to do with Forex trading. But then I have a good book. I'm sort of all plugged in here. I don't want to move, but I can type it in the chat later. It's just on technical analysis. And it just shows like the cup and handle pattern, the head and shoulders pattern, things that you can find online. But yeah.
Actually, that book there, that one thing, because that's the second version. So I read the first version, which I bought on the Kindle actually. But he likens there's a whole chapter on about AA, which is Alcoholics Anonymous, and how he associates trading some traders with basically being alcoholics.
Yeah.
Others, you just can't put it down, and you keep sort of saying, "No, I'll leave it alone." Then you go back and do another revenge trade, and up you go again.
Sure.
And then you think you cracked it, and really, at times sometimes just to walk away because and abstain. But it's like
yeah.
Some people get addicted to it. It can be very addictive, and if you think you're getting that way, and you think you're doing things that are against your plan and against what you've set out beforehand, and that it's if you're being embarrassed to tell your spouse about it, or your partner about it, or your mates about it, then chances are you've crossed the line that maybe you shouldn't have crossed.
Yeah, that's right. That's true. That's true. I agree. All right, Andrew. Well, I guess I'm going to sign off for now. And
Yep.
it's been a pleasure. Thanks, everybody, for taking the time here. And don't forget, you can email us both if you need anything from us. Jason at ForexSignals.com and Andrew at ForexSignals.com. And we'll be in the premium room here later on, chatting around. And, of course, over the week, next week. If you're in the States, we're getting hit with a big storm right now. I mean, I'm looking out my window and it's just like whiteout snow. We're supposed to get over a foot of snow here, and just terrible weather lately. But it's winter, so we don't mind. Anything else you want to add, Andrew, or should we click it off for the day?
No, I'm done. I'm back to. I'm done. Well, have a good weekend, all. We're going to do this every Friday, so we'll certainly see you next Friday. Might pop in now and again just to say hi, because there's a few people in this room that I like to chat to, and hopefully like chatting to me. So I'll pop in periodically, but we'll definitely do a joint one next Friday. Of course, if you don't like us, you can just turn us off.
We'll be on Monday morning as well, joint in the premium room. We're going to do Monday mornings in the premium, and then Friday here in the public and premium together. All right. Well, thanks for taking the time. Happy trading, everybody. Be safe and have a good weekend.